Hey traders, Park here with an update for my range indicator, range trend indicator. That's what I'm gonna call it. But for the most part, I did a few updates on it, and let's zoom in. This is an E-mini S&P 500. We're gonna look at yesterday's, and then we're gonna go to today's. And these are the updates that I made to it, where you can actually go in and decide what percentage of bars that you want within the high-low range. And for the most part, you got 25, 50, 75, or 100%. I have this set at 12. I have it set at 50% of the bars of a 6 bar straight within the high-low range. You can change the actual average line. That's this line that's going from purple to blue to cyan to red. You can change it. Right now I have it set to open. And if you look at the line, it goes from purple, cyan to blue to red. For the most part, that's just tracking volume, volume average, and price average. So if price average is heading down and volume is increasing, it'll turn red. If price average is heading up and volume is going up, it'll turn to cyan. If there's a divergence where price average is going up and volume is going down, it'll be purple. And the normal color is just that dark blue. You can go down there and change. Those things can be changed for the most part. These are the globules for the different colors. So, and when we go to the actual average, price average, there we go. So divergence, I just named it D1 because it's not finished yet. And normal is blue, trend 1 and trend 2. So those are the different. Those are some of the updates I added in there. But for the most part, we're trading within this profile of looking for bars. The 6 bars, or half of the bars, are trading within the range of 12 bars. And you can see right here where the E-mini basically was trading within this small range right here. And then you can see how the middle line changed color to cyan, telling you price average is increasing, also volume. And so I probably would have taken a trade on this break and used this candle or possibly this field right here as my risk. And you would have stayed in a trade for what you want to for the most part. But these are those ATR levels. Each one of these levels are ATR. And I have it set up a certain way where this is 1 ATR, 2 ATR, 3 ATR, 5 ATR, and 8 ATR. If you're familiar with Fibonacci, that's the original. Those are Fibonacci numbers and not the ratios, because Fibonacci goes for 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, and 8 plus 5 is 13, so on and so forth. This is adding the previous number to the new number. That's the only reason why I chose those. You can go in there and change. They'll be fully customized. You can change those. But the real advantage to using indicators is finding these low periods or these low periods or these quiet periods for the most part. You can see how this was a pullback and it only went to the midpoint of this range after it was created. Then you got this push above, nice volume. This white candle represents volume above 2 deviations. And you, for the most part, it stayed within this ATR level of 1 to 2 ATR right here, and then it pushed above into this three times ATR. Couldn't really sustain it, but you can look. All of this is on low volume. You got these different colors flickering through the actual average, but for the most part, price average is going trending up, but volume is trending down, and you can see that in the candles as well, and you can see that in the average as well. So you can see where you're getting these pushes where volume is pushing up, and finally volume push up, and you can almost look at this like momentum, and volume and price average are trending up, and that's when you get this big move right here. It didn't find another one because no 6 bars was trading within the high-low range, and just trended up until it got right here. So what I'm going to do is I'm going to change the profile to 75. So for the most part, I believe that's 9. So you're not gonna get anything. So, and it's basically just trending up through there. So So you're not gonna get anything right there. So for the most part, you still, I mean, everything is still working just fine. You're not gonna get any breaks in this ATR cloud either. So you'll just be trading like that. This is a more softer way of doing it, and if you push it up to 25% of the bars, that's gonna be 3 bars. If you're using a 12 period average, whatever, just be mindful whatever average you're using on this, that's the percentage of bars it's looking for. So we can change it up to I'm not gonna go to 100 right now, but we'll push it back down to 25, and this is a more aggressive way of trading, and you can see how it's finding these ranges just like that, and it's finding more of those quiet periods. So it's looking for if it's on the average of 12, it's looking for every 3 bars trade within a high low range of 12, and that's where you're getting these ranges from. So this is how I originally previewed it or debuted it, but I decided to go ahead and switch it back. So we're going to push it to what's going on now, and this is the like I said, the E-mini S&P 500. I have some lines on here, and the other thing is I added was this gray line. It's called the past high low range, and it'll show up once this is actually broken and give you some so you can still see where that high was, so you're not just trading without where the original high the range was. And you can see right here in the S&P 5, and you can see how price and volume, your price average and volume are both trending up. You got some irregularities right here where it's going switching back and forth, but it finally broke above and shot up. Right now you're getting divergence. It's hitting this high right here. You can see volume is dropping off, or volume average is dropping off, but price average is still exceeding up. But you can see how far price is away from its average. So you almost look at like these ATR levels almost being like Bollinger Bands as well. So as volatility increases or ATR increases, these lines will separate, but for the most part, this is extremely high. You can look at it like this. This stock is trading 3 times its normal ATR. So right now, you're looking at a pullback. Right now, it's showing low volume. So I can switch this. I'm gonna switch it back to 50, and it should give us a better. I have so many windows open. That's why it's running a little slow or lagging like that. So I'm going to switch back to 50, and we're going to look at it like that. But for the most part, those are some of the changes that I made in it. And this really works well if you're doing technical analysis. Just got to wait for it to switch. I need to close some of my windows. But for the most part, that's the news. And here it is on the hourly, and I have it set for 15. So for the most part, it just broke above this hourly range. If you're looking at it from here, this low, is it that low? Or this low right here to this high right here, where's the move, was the actual move. Once it broke above this range right here, and you can look right here, you can see right here, volume and price was both being driven up until this point. But for the most part, it broke above this range right here. And this is your average right there. And I would mark out these levels I was more so marking them out on a 4-hour chart than I was on an hourly chart. But I would come through and just mark out these different levels like this for these ranges, or tops and lows of these ranges. And I make that one like that. And I switch this to a 4-hour chart, and we'll do 90-day 4-hour. And I will change this to 30. You see there, here's the break of this previous range. Make sure it changed. And it didn't change. I need to close some of my windows. I should have closed the windows before I got started. But for the most part, you can see this is your high of the range. Here's your midpoint of the range. And I would just go through and mark these out. So if I were to go, and you can see this is your past range low right here, and it after it broke down below on this candle right here, it kind of rode it a little bit, but then it broke down, and it didn't have a whole lot of trouble, but it took a lot of volume trying to get back into it. But I would basically go through, oops, and mark out these highs and lows of these ranges. And I'll just duplicate this and pull it back to where it actually broke. And just look at it from that standpoint, and we'll go back to the, here's your, I believe this was the hourly, and these were the 4-hour ranges that were created. And just look at those from a technical analysis standpoint, and we'll go to the daily. I'm going to go ahead and just erase the line, so because we can't really see anything. You can see right here it broke below this range and just crashed down right there. It broke above, but it wasn't able to sustain it, and then it tried to break back above this range and couldn't, the past range, and couldn't do anything. And you have here where the come on, mouse. You can see here where the it's just trading within this range. I have this set on a daily on 16. I'm using 50% of the bars. And you can see right here the S&P, E-mini is just trading within this range. Trading within this range, and it's trying to break above this range right here. And here's your 50, and this is your average right here. So we can push it over to this weekly chart. And I have my weekly chart set for 13 and 50 as well. And for the most part, you're seeing the same thing. It's trading within this range. It broke down below, and you got some buyers that came in. That's what you're seeing within the price candles and volume. And it pushed back above, got above its average. You know, you had this divergence here. Volume was averaging down, but price was averaging up. But it held this 50% line for this range, and you can see the 78.6 field right here is having a hard time breaking above. It's sitting on it, but I would call those breaks just because the body of the candles broke above on this weekly. But for the most part, you can scan for this as well. So that's another game changer for this. So I have it set for 13. I have it set for 75. I'll change that 75 to 50 instead of 75%. So we'll change it to 50. And I have it set for 2 bars, but let's be more aggressive with 1 bar. Let's see if anything is broken above with that 1 bar. And we have, which one has the most volume and percent change? SIEB. 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 If you're unfamiliar with Ann Coulin's book, Volume Price Analysis, she talks about stocks just trading within ranges. And they can trade within ranges for months, weeks, days, whatever. But for the most part, this is what makes this a game changer, where you can actually see where stocks are breaking above certain ranges. So all I'm going to do is just mark out these 2 ranges for this day. Well, this is a weekly chart, and it looked like I've looked at this stock before. So I'm just going to pay attention to the ones that I'm looking at right now. And we're going to go back to the flex grid, and this is your daily. Here's your daily range. It's the same as weekly, obviously. And this one isn't, but you got a couple ranges back there. And we'll shift it over. Here's your 4-hour, It broke above this 4 hour range right here, and this would have been very nice if I were to go to the scan and look for anything breaking above its 4 hour range. And you can see how it just traded within this ATR. What is this? One, two, three, three times ATR, 4 times ATR right here, and just traded within the ATR level and just use their support or resistance. Use their support resistance. And right now, it's just having a difficult time. They're not. I mean, they're spreading, but it's not very effective on this 4 hour level with these ATR until you get more time or more data. So we'll switch over to the and this is what we're looking at on the 5 minute. I believe these were the last lines that I made right here. So you can see right here, SIEB. It really made its move after hours yesterday, but it's up from where it was before when it was just trading around $1 or something. So this isn't the best stock to be looking at, but for the most part, Thursday payback, that's not very helpful. So let's go back to the scanner. Let's see NYCB. NYCB looks great. So this is what it did today. And let's go look at the weekly chart. I may have looked at this one as well. It had a breach, but it breached down below. I made a mistake on my scanner. So if you look at the scanner, it's showing day. That's where I made the mistake. I had set for 16. So I apologize. I'm not gonna cut this out of the video. It's a mistake. But it still should show the same on this daily chart. There's your break right here on this daily. So you can scan for daily or weekly, but I like to look for more so on the weekly than the daily, just because weekly ranges are stronger. Weekly areas of support and resistance are stronger than daily areas of support and resistance. And even if you want to go to the monthly, but for the most part, I made a mistake, but hey, it's still working out in my favor. And I'll change that to the weekly in a moment. But I will mark out this at low and this high right here, because this is probably where it's going to go to. Just as support. So those are my weekly levels, and here they are. You can see how I traded within this small range from the weekly stuff that I marked out. You just traded within this range, and you finally got this break right here. And then we will go to the 4 hour, and here's your 4 hour break right here. Actually use this range right here. But as you can see, once this is you drilling or me drilling down, and you can see it's just trading within this this area right here for 4 hours. And I don't know how many days, but you could say, for a while. And let's go minimize out of there. And where are we trading at right now? So this is a very explosive and volatile move on good volume above 2 deviations. And we're just looking at a trade within these different ATR levels away from the average price. But you have this huge breakup right here. I'm pretty sure it got halted too. Or I don't know. I'm pretty sure it got halted. But it broke above this range right here and shot up. And right now it's trading back to its actual average. And depending on the actual news for this, so New York Community Bank says credit clocks. I guess so. So this is all good news, I guess, for the bank stocks. And this is what it looks like. Usually how I'm trading. And you can see it came back to its average. And here's your deviation. divergence point when you get the price is trending up and our volume is trending down. That's why that's purple. And let's go back to the scanner and let me take this to the weekly and let's look for this. SEIB is the only thing that popped up right now. I probably have to get rid of my volume criteria, but let's get rid of the volume criteria. And I guess I got rid of my price criteria too. Let's see what it gives us back. This is what it brought me back. I actually put the criteria back in there between stocks between $1.50 and $1.50. And this is what it returned to me. And which one has the most volume? SEIB, ABB, that's not a lot of volume. So looking at it on this weekly, this one don't have a lot of volume. It got 4,000. And it's trading 7% up. So it opened at 10 and it's trading at 12. BKTI. Oops. Yeah, we're not gonna be looking at this one. So let's go back to the scanner, and I am going to change this for my daily parameter 16. And let's go back to the day, and we'll scan. So my daily timed out. It had an execution error. I don't know why that is. Well, let's try the 4 hour. Okay, this is what it gave me back in my 4 hour. So we're gonna go look at some of these 4 hour ones. There's NYCB for the 4 hour. These volume levels are really nothing. APCX. APCX. Here's your 4 hour breakdown here. So the range was here at 212. It went up to 259. And here's your daily. So it's breaking on the daily as well. And we're looking at it on the weekly. It looks like it's no, it's not breaking on the weekly at all. So it'll be $5, but you can look at it like this. You can trade up to this midpoint. That's not the actual midpoint. That's why I say the indicator is not ready, because that's not the actual midpoint for this range. But on the weekly average, volume is trending up while price average is trending down. So I don't know though. It could make for a unique V, almost a V bottom right there. And you can look at these long little wicks down here, and it broke above this old weekly high. So next one, the one after that. So that's on the weekly. The daily, it hit it. There we go. It hit this resistance level right here. Came down. I almost came down back to this past resistance, became support, but it's still trending up. And that's one of the things I learned from bullish bears. Old resistance becomes new support, and vice versa. Old support becomes new resistance once broken. I don't pay too much attention to the highs breaking above, but I do pay attention to the reactions of the highs breaking above. And if it's a negative reaction like this one, this long upper wick, I probably wouldn't get into it, but I would probably get out of the stock actually. But if you get a stock trending, going to the downside to a support area, and you get a long lower wick that way, that means just buyers are coming in. But this one looks more like sellers came in once it hit this that higher resistance area up there. You know, you had nice volume, and then this volume came in, but it's at this lower period of the day uh, as well. And volume right now is just trending down. You can just see these low average volume candles right here. You're not getting this explosive moves like you were before. But it's nice to find this quiet period, especially with this midpoint of the range right here. It bouncing off of that midpoint could try for again for 250. But this is gonna be the end of the video. I appreciate you guys taking the time out to listen to what I had to say. These are some of the new features that I added to this indicator. When it's available, just I'll do a new video when I worked out a lot of these bugs and kinks and everything. But for the most part, the indicator was created because I wanted to find a better range indicator. You know, you got the Darvish box, you got my old range indicator, and you got a couple other different things that show you different ranges and stuff. And you can always just go out there and mark your ranges out. But for the most part, that's one of the reasons why I created the indicator, to help me and possibly help others as well with their trading. So look for a future video, and look for a future video once I work out a lot of these bugs and kinks, when the indicator will be available. Like I said before, thank you for taking the time to watch the video. If you found this informative, please like and subscribe. And whenever I give away the free indicators, you'll be the first one notified of it. And I wish you all the best, and God bless. Stay safe out there.